Hello, fellow traders. Welcome to another video, educational video to help you guys out in your trading journey to profitability and finding what new ways to add new things to your tool belt, as they say. The more things you know, the more things you can implement when it comes to this trading. So the more you know, the better. So today we're going to be talking about briefly the double bottom and the double top pattern, um, and also the misconception of the double bottom pattern. So I'm going to get right into it, guys. So the double bottom pattern is a reversal pattern, and it usually happens at the bottom of a downtrend, and then it signals the end of the downtrend, and a new uptrend is formed. Hypothetically, I'm sorry, theoretically. So I'm going to show you guys how to take advantage of that, the double bottom. So you'll recognize a double bottom with this somewhat of a W shape. You're going to have a move down, followed by a move up, another move down with a similar bottom. It's going to bottom out in a similar location. I'm going to show you now a similar location to the left bottom. The right bottom is going to be as similar. Now we'll note that sometimes the bottoms are not exactly even, but as long as it's within, I would say 5% of each other, then you can label it as a double bottom. So say for instance it goes down and it stops here, or it stops like here, in this little area here. That's still considered a double bottom. Alright, so the misconception of the double bottom is a lot of traders, especially when you're just beginning. I was one. You would trade the double bottom as soon as you see that it has made a bottom and you see that it's just starting to move up. That is the incorrect way to trade a double bottom. Alright, so you would not take entry down here for the move up. You can do that. You absolutely can do that, and you may or may not get a movement. But here's the reason why you don't want to do that. The reason why you don't want to do that is because who's to say? Okay, let's see. Let's say you have a double bottom here. Well, you have a bottom. You have a move down. You have this move up. You have this move down, and you see it kind of going up. Who's to say it's not going to continue in a downtrend? You see, had you would have taken the entry up here, you would have got faked out, and it's continuing down. We see this all the time in the market. You'll see a down, a lower low, a lower high, and who's to say it's not going to make a lower low? That's why you don't want to trade it at that bottom. All right, so the correct place to take entry on the double bottom is the highest point in the middle. I'm going to mark it up for you. The highest point in the middle of the double bottom. Alright, so whatever the highest point is in between the two bottoms, similar bottoms, is where you would take entry. Okay, so you see here, it made a move down, it made a move up. This would be the point that you would mark up. You would make a horizontal line to your right, as far to the right as you need to make it, until it is crossed to the upside. Once it moves across to the upside, you take a buy entry at this point, and for a move upward. That would actually signify that a turnaround is at a high probability of happening. once it crosses this middle line. I like to call it the crotch, but you can use any term you like. Because it's in the middle and it kind of looks like some legs in the middle of the legs. That's why I say that. But you can call it anything you want to call it. But this is where you would actually mark up. And then once price gets to this level and goes above it, you take entry. I'll give you an example of it. Can you spot it on this Apple chart? There's one on this Apple chart. Can you spot it? Give you a couple seconds. Alright, I'm going to point it out for you. Alright, so you have the double bottom here. And as I said, this is on Apple here. And as I said, the bottoms, as long as they're very close, they're not always going to be exactly identical. But you can see here, Apple pulled down, followed by a move up, followed by a move down, and it could not go any lower. So that right there should start to get your antennas up. Once you see it start to make a move up after it gets close, or either at this level or very close to this level, when it gets close to this level, as you can see it did, now your antennas go up. So now once you start to see it moving up, you mark up this level. You're gonna mark up that the highest point in between the double bottom, whatever that is. So if I mean, this is not the highest point, this is the highest point. Whatever the highest point is, it's very easy to spot. If you have any questions like, okay, well, where do I mark the horizontal line? It's very simple. Once you notice a double bottom, the highest point in the middle is where you would mark it. Alright, and as you can see, once price broke it, you could see that it broke it, and it broke it in a strong fashion. So that tells you that that line had significance, had a lot of significance to it, but because of the fact that it broke it very powerfully. You know what I mean? It wasn't one of the small little candles that broke it. Alright, so that's one example. Let's take you to another example, just to drive the point home. Tell me if you can spot it. This is Microsoft here. This is the chart. You can, and all of these examples that I'm showing you guys, you can go. Don't take my word for it. You pull up your charts on whatever apps you use, and you'll see these as well. So you can practice it actually. All right. So tell me if you can spot the double bottom here. Give you a couple seconds. Alright, so I'm going to point it out for you. If you said this area here, you were absolutely correct. Alright, and I'm going to show you why that is. Now, I'm going to give you guys a word of advice when it comes to this. The further apart typically the double bottom is, the stronger it usually is. The closer it is, it still can be very strong, but just make note of the distance between the double bottoms. A close one and a farther out one. That's just a little tip, that you can keep in your mind once you see these form. And there's multiple types of double bottoms. Like I said, there's what they call atom double bottoms, where you have sharp bottoms, and then you have eve bottoms, where it's more rounded, a more rounded bottom. But they are still double bottoms, but it's rounded. Those are eve double bottoms, but in this case you see the double bottom here. Alright, so I'm gonna point it out to you. You see the bottoms here. See, price got to this area once, it got up, it actually came down kind of close, but see this is an example of why you probably you shouldn't have took the trade. You would have made a couple dollars here, but this is why you can't take this and count it as the double bottom, because look what happened. It went up, but it never got over this point, and it came back, and in this case it did bounce, but it could have went lower and continued a down trend. That's why you don't take the buy at the bottom. You can, not saying you can't, but that's not the proper way to trade a double bottom. All right, so now that you see that, I'm gonna show you where the market up. All right, guys, so you mark it up. Like I said before, this is the highest point. The highest point between the double bottoms here. This is not the highest. This is not the highest. This is the highest point. That makes it as easy as you can make it as far as where to mark up the double bottom. All right, and as you can see, it gapped over it. That shows you that it's a very powerful area, because you see how price responds at these levels. So usually if you see price responding strongly, it's usually at a certain level, a certain powerful pattern, or it's a reason for its movement. And in this case, it broke the high point of the double bottom. Okay, so moving on. Now you have the opposite of the double bottom, which is the double top pattern. Okay, now the double top is a pattern that usually signals a reversal of an uptrend, and it signals that the uptrend is about to become a downtrend, because it basically is saying that price it has come up to a point, come down, and tried again to get over a certain point, and it just couldn't get over that point. So that's usually a sign of weakness, and then you wait for the move down. The same rules apply here. You would put, same rules apply. You put once you notice a double bottom has formed about at this point here, you go ahead and mark up the bottom for the move down. Okay, like so. All right, so now once you noticed it, your sell entry would be under the low point. In this case, it'll be the low point in between the double top. Okay, all right, let's go to an example of it. All right, now this is Tesla. This and again, these patterns, they happen on any time frame. All of the examples that I've showed you here have been on the daily time frame, but they happen on any time frame. But I will note that the higher the time frame is usually the stronger and bigger the move will be. All right, so if you're dealing with a daily double top or a daily double bottom, you're usually gonna get a bigger move than you're gonna get on a 1 minute double top double bottom. You're still gonna get a move, but the bigger moves usually happens on breakouts of the higher time frame. All right, so give you guys a second to see if you can find the double top on this chart. Okay, if you said right here, you would be correct, and if you didn't, that's fine. If you thought it was somewhere else, that's fine. You got it. That's what learning is all about. You're not gonna know everything right away, but you will get to the point of knowing it. That's what I'm here to help you with on this video. So anyway, this is the double top of Tesla, and as you can see, it came up, it made a high point, went down, came up, could not break over this high point, and then it fell off. So that would register this as a double top. Now, as you should know by the earlier parts of the video, where would you mark up here? Okay, if you said here, you are absolutely correct. This is the lowest point in between the two tops, so you would just go straight across. And once price gets to this level, get ready to take an entry. And as you can see, as with all of our examples, The move is powerful. I mean, I'm talking lots and lots of dough in here, lots of money in here to be had. Had you taken a break, you would have profited big. And actually it went down here, and it really fell off. So guys, this is powerful stuff. That's the double top and the double bottom. If you spot them in the market, mark them up and just wait for the break of the midline. And you can, if you stick to these. See, the thing about it is, guys, some people may say, okay, well, sometimes the patterns work, sometimes the patterns don't work. That is true, but now this is the key. You must stick with it. If you are consistently taking each double top or double bottom that you see, and you set the proper risk management, you have a tight stop if it goes against you, but you have a large profit target to let it run. At the end of, let's just say, at the end of 10 trades, or at the end of 10 double tops or 10 double bottoms, if 2 or 3 of them didn't work, out of the 7 that did work, you're going to be in profit. See, the key is, guys, you have to have the proper risk management, and you have to be consistent with it. That is the key, guys, because nothing in this market is 100% and works 100% of the times. All right, guys. So, but these are high probability patterns. So I just wanted to put that out there, because I know there are some, people skeptics, and understandably so, that'll say, okay, well, patterns don't work. Head and shoulders don't work. Double tops, double bottoms. What is all that madness? Blah blah blah. But the thing about it is, you have to take each one that you see, each and every one, and then in the end, it will work in your favor. It's similar to the casino. The casino, they don't make money on every single, say if you're at the blackjack table or something, they don't make money on every single hand. Sometimes the player wins, but they know ultimately they're going to come out on top. That's the same with the market. If you take every double top, every double bottom, and you take it at the proper entry, and you set your proper risk and reward ratios, guys, you will see your account grow, and you will see it grow exponentially. All right, guys, so just all I can tell you really is just stay consistent with these patterns, and you will see your account grow. You will see it grow, and you will be able to start making withdrawals, people. not just deposits. You will be able to start making withdrawals, guys. That's all for today. I hope you got something out of this. If you like the video, guys, hit that like button. And I'm going to be dropping. I have some very good stuff coming up. If you want to be in tune with it, go ahead and hit that subscribe button so you will be notified. I got some stuff, man. You think this is something? I mean, we're talking like, this is more beginner. And I'll say, like, maybe pushing on intermediate, but I have some advanced things I'm going to be showing you guys that's going to blow your mind. All right, guys, until next time, happy trading.